Today we welcome Vasudha Madhavan, founder, CEO of Ostara Advisors, to our team studios located at our campus in Pune. It's an interesting day today. It's the 7th of March. Typically it should be a hot day, but we are in the middle of a thunderstorm and it feels more like a cold, blustery winter's morning somewhere else in the world. And the birds seem to be having a great time frolicking around the campus as a result, something you don't see at this time of day. Vasudha, you are CEO of India's first electric mobility and sustainability investment bank. And your company, Ostara Advisors, has facilitated some of the pioneering investment deals in this sector, such as, for example, Greaves acquires Ampere, or Altigreen raising the largest private equity round in this space in India, or perhaps the first time a Silicon Valley-based set of investors has invested in the EV startup ecosystem in India, among several others. To our industry sector, you perhaps need absolutely no introduction, as you touch every CEO and founder in this space to help them. So thank you for making the time and traveling from Bangalore to Pune to be a part of this.
Oh, it's a pleasure. In fact, the weather's making me not miss Bangalore at all. So it's making me feel most welcome.
Making us as cool as Bangalore. Yes, if you ever needed an example or proof that climate change is here, this probably is it. Vasudha, you've been with us 2 years ago. You were featured on the program. Thank you for making the time to come back. I'm interested, between that time and now, what do you think has changed in the EV sector?
Yeah, so it's actually been 2 years, and I think for most of us who've been early insiders in the EV ecosystem, we've seen it grow for the last 4, 5, 6 years. I think it's definitely been a transformational period. I think definitely COVID created several triggers to the transformation. Most importantly, what we saw was suddenly fuel prices being very volatile, and that leading to fuel prices being volatile, people stuck at home, a lot more e-commerce that happened in India, and that those kinds of things, though while we didn't connect the dots at that time, really helped in pushing forward the EV ecosystem in the commercial segment and in the last mile delivery segment. So I think, to me, that was one of the largest sort of sudden changes. And there has also been during the pandemic a greater awareness globally towards net zero and towards climate positive businesses. And that, I think, these three are, they are really macro. Two are macro at an India level, and the other one is really a global macro. But it has helped tremendously in creating awareness and in also activating global investor pools in this direction, which is really, really important. Because for India, for the EV ecosystem to really grow, and when I say the EV ecosystem, I mean the whole value chain from the battery cell, the manufacturing end, which you're so aware of, so closely associated with, to the end of fleets and applications and even retail applications and so on, and everything in between, supply chain, charging, and technology, and everything else. It's really important for this ecosystem to kind of take off, and that can only happen with access to global capital, and that would not have happened with all of, if it were not for all of these changes, and then the geopolitical changes with respect to China, and then India coming to the forefront globally also. A lot of this has kind of led to those tailwinds.
So the last time we met, you'd raised a very interesting data point. You talked about how the investment that had happened in the EV sector in 2022 was the same amount as the last 10 years put together. So you had almost a 10x growth in investment in that 1 year. Here we are now, 12 months later. What are you seeing in terms of investment deals? What's happening in the market? I'm particularly interested in which sectors. You talked about commercial, last mile. Is it 2-wheelers, 3-wheelers? Is it cars? Is it trucks? Is it charging? What kind of deal sizes are we looking at over the last 12 months?
Sure. So we analyzed this in January when we actually put out our newsletter. And what we saw were a couple of interesting trends. Firstly, between the calendar year 2021 and the calendar year 2022, the total amount of funding that came into the ecosystem was 1.7 billion in 2021 and 1.3 billion US dollars in 2022. So while it was slightly lesser, the interesting thing was that it was in 2021, much of the funding went to 2 or 3 large players. 1 billion of that 1.7 went to Tata Motors, and 700 was split between a lot to Ola and a little bit, and a long tail of maybe about 200 million or so across a wide range of startups. Whereas in 2022, this whole of 1.3 billion dollars was split in I think the largest deal would have been a $250 million deal or so, if I'm not mistaken. I don't have all of the numbers with me right now, but it was definitely more diversified, to a larger, slightly larger checks to more startups. There were probably about 40 to 50 venture capital and private equity deals that closed in 2022. A lot of them came through some which were either institutional investors, and they were even family offices, or they were names like Magna, which invested in 𝐬𝐭𝐚𝐫, and so on. So there's also this there's this interesting trend towards strategic, which we can talk about. So that was really the difference: very concentrated to slightly more diversified. The other sort of top trend was OEMs, which I think continues to remain. OEMs do take 70-80% of the share of funding, and then slowly we expect that the supply chain and the financing and the components and the technology and the charging, all of those parts, so those have typically tended to be all set within the 25% of the share of funding.
So you talked about an interesting trend of strategic investments in this sector, which I understand would be companies that are in the sector investing in other startups or technology companies in this sector, versus PE or VC funding, purely on risk to see where this technology will go. Why do you think that is happening? Is it because the frothiness disappeared from the PE and the VC market in 2021-22, when it was almost a holiday or a blackout of any investment funds doing anything anywhere in the globe, and therefore strategic investors taking that space? Or is it about the bigger companies in India waking up to the fact that the market has moved too quick and now they're trying to catch up and be a part of this play?
I think it is both, for sure. Globally, what we've seen is, in India and globally, we've seen that incumbents have found themselves suddenly waking up to this change, which
happened so fast,
has happened so fast, and which is sweeping the world. And a lot of their R&D and a lot of their investments into plant and machinery technology and everything over the last 10 years is suddenly looking irrelevant.
Yes,
so totally. Now there's this need to access technology, there's a need to access those order books again, with being equipped for it, and being present in the change, and being relevant and continuing to remain relevant for the next 50 years. So there is that sudden sort of move which has made a lot of the strategics wake up, and hence just go out scouting for opportunities, whether minority or majority, a lot of them majority. The other thing that did happen also that played into it was that there was a significant chill in the funding market, and that led to maybe investment bankers reaching out to different sets of investors that they typically wouldn't have, and those things happened, and adding to the tailwinds that were already happening in India was that the market was growing. There is last mile mobility happening, there is a lot of quick commerce happening, there is a lot of last mile deliveries and things like that, which are continuing to lead to demand for those kinds of vehicles and services, and swapping, charging, so it kind of all came together.
So I want to focus this question from the perspective of a young startup founder who's got an idea and will eventually come to you for funding, or come to someone like you for funding. So 2 questions on that. First up, what are the average ticket sizes that you're seeing in new technology startups today, looking in terms of investor appetite? And secondly, as a founder in an EV tech startup in 2023, what should be front of mind when you're going out to look for investors?
Sure. I think more than ever, while this industry is nascent, and while sales of 2-wheelers, 3-wheelers are on the way up, but they're still nascent. They're still a small percentage. In 3-wheelers, it's probably a decent percentage of new sales. But on the overall market, they are a small percentage of vehicles on the road, etc. There is definitely a lot of startups still creating vehicles and saying that, we want to be the next 2-wheeler OEM made for delivery or made for shared mobility or made for this kind of personal mobility use case. So to those, I would say that it's going to be difficult to fundraise until and unless you've displayed traction and you've displayed that you're significantly different, because again it's a mass market and it's less about how cool the product is and but more about how much you can, how many of them you can get it into people's hands and then support the users. Price and service and availability. So that's what it's all about. So there it's going to be pretty much more about, are you already in traction mode or not? In technology or in areas where innovation is upfront, I think I would still say that early fundraisers are happening with institutional investors, which 2 years ago we didn't see, and so most of the companies used to actually access the family investor market. But today we can see early stage VC funds coming there. There for sure, it's like if you are creating charging technology or you're creating something with relation to a component which is electronics, etc. It's definitely going to matter that your technology is rock solid. It can hold up to some global comparables. It can actually have a good moat, and you're able to build order books in India, and you're able to, so you've started things off on the traction front as well, and definitely innovation plus traction will enable you to get that first check, and you can even start with a check as small as $1.5 million, 2 million, 3 million from some of the early stage institutional investors. I think today what some of the early stage institutional investors are looking at also are, they're more open to a bit more hardware, right, in addition, and so that is very important that we have the investors also approaching it that way.
So you talked about these sectors. You talked about last mile delivery or two-wheelers. You talked about some innovative two-wheeler technologies, and that could be, the Ather, Ola, Torque end of the spectrum. And then you've got the three-wheeler market. Lots of people trying to be there from, tons of names now. Whether you take Kinetic, Mahindra, OSM, and Altigreen, many others, right? Yet, outside of the innovation tech space, which is Ather, nobody dominates any of these last mile delivery spaces yet. There isn't a clear outline winner in two-wheelers for last mile delivery. There isn't a clear outline, winner in the space of three-wheeler. Do you think this market will always be fragmented because it's growing so quick now? Or do you think we'll go to the way of the old India, where one or two companies dominated the sector and everything got settled down to that?
Yeah, I think the overall trend of how many OEMs will be present is it's overarching. The commentary there is more overarching rather than it being limited to personal mobility or last mile delivery. What is happening is there are more use case based vehicles that are being made, and that can be made with the electric vehicle technologies. Right, you can create very, very tuned vehicles which can either are suited for load carrying or are suited for certain kind of speed pickup and things like that. So, it is becoming that kind of a play. So you have variants based on use cases, which earlier you didn't have. And having said that, I think and also what's happening is that there are more OEMs, because the barriers to entry for an OEM or for a product to be developed as an OEM are relatively low, and so all you need to do is you have fewer parts, you need to perfect those. In some cases, companies or businesses or founders are aggregating those parts and creating it. How long that will go is a different story, but I think you have a lower barrier to entry overall if you want to perfect fewer parts and then be able to build supply chain around it to be able to succeed. So I believe that a lot of the players today that are dominating the two-wheeler, three-wheeler space are definitely new. OSM, Altigreen, Euler, and others didn't exist earlier in the old IC ecosystem as OEMs. Right, so these are all new names in the EV two-wheeler space. All of them: Hero Electric, Okinawa, Ather, Ampere. All of these are new names, and to that as two-wheeler in their current avatars, right? So in some sense, it is going to be a larger number of OEMs, and when the dust settles, I think it will be more fragmented than the ICE.
That's interesting. Okay. So that is actually exciting from the investment perspective. So let's look at this same subject instead from the founder's perspective to the perspective of a potential prospective investor. The Energizing India podcast, we found the investment community across the world tends to listen and send us little emails asking us further questions. If you are an investment house looking to invest in India in the EV space, what are the sorts of opportunities available in 2023?
Very interesting question. So, see, as a EV focused investment bank, we have basically the core mission is that we need to get Indian founders, the best and brightest in the EV ecosystem in India, to get funded access to global capital. And the more we can catalyze this, the more this ecosystem will grow, not just for the Indian market, for the global market. And that's a unique opportunity that India has, where we have both innovation and manufacturing scale that we can build. And so it's important that we curate and we invest, quote unquote, invest in the right businesses and right founders and have them access the global ecosystem. And to the global investor ecosystem, our commitment as Ostara Advisors is that we will bring you the right kind of businesses. We will do our diligence. We will use our technical understanding to curate the right companies and take them to you. And to them, I would say that the opportunity is immense. Today, when the world is going electric, when energy is going renewable, there are components, there are parts of this ecosystem, both on technology and hardware, that need to be created from scratch. And Indian companies can actually do this. We can manufacture, we can do R&D, we can create these components. So there is a huge opportunity in EV vehicle components, in energy components, which can go into renewable energy storage. There is an opportunity in electronics. There is an opportunity in battery recycling. So across the value chain of all of this, there is opportunity in financing these businesses, right? Which comes under climate positive financing or impact financing, etc. So there is a wide range of opportunities. If you go look a little deeper, go beyond the shiny OEM names and just look a little deeper, there is a lot that can be actually that can be funded, including the OEMs. I mean, a lot of the OEMs are creating stellar products for the world, for India, for use cases that can be funded. So this whole ecosystem is there.
So that must mean 2024 and 2025 will be quite exciting years in the EV sector, particularly for new investments.
Yes. And the growth is going to be there. So 5 to 10 years, the growth is going to be there. Indian policy has been extremely supportive.
Absolutely. So have you seen in the last 2 years a difference in the China Plus One strategy of global majors coming to India to manufacture? Are you seeing that really on the ground, or is that still at the policy level?
No, absolutely, we are seeing it on the ground. In addition to helping startups raise funding, we also work with incumbents in the automotive and energy ecosystem, where they are trying to access either technology or they are trying to respond to their clients who want them to supply these parts. Right, so the Indian automotive industry is 7.5% of India's GDP, so it's a very large industry, and this industry is trying to respond to this new change. And in this, we see that those clients which are global tier ones, global OEMs, are asking our tier ones to come up to the table on battery parts or motors or what have you. So there's definitely that. I don't think I think it's up to us to really be able to support this. So there is demand. There is global demand.
Excellent. So for you personally, which are the sectors within EV and electric mobility that you get most excited about when something comes across your table?
I think that I would say that this year we've set a mission that we will work with the component ecosystem, whether it is charger components or it is motors, controllers, pack components, etc. Definitely, I think that is a foundational layer for the EV industry to grow, and we have had a dependence which is global. I think I kind of missed mentioning it in your previous question, that all these global OEMs that are talking to our companies today to supply them parts are saying, "Oh, can you replace China, or can you can we give those orders to you? So that is an opportunity that we have. So that is something that I'm excited by. Indian EV consumer needs financing, whether he or she is a business consumer or a private personal mobility consumer, and that's an area also that we believe is going to be strong.
It's changed a lot in two years, hasn't it?
Yeah.
Banks are willing to
Banks are
provide
willing
loans
to,
now,
but there's still a little bit of
reticence.
hesitation. Yeah.
It's still a lack of understanding.
Yes. So we need to decode that space. We need to get that kind of supported, and of course the supply chain. I think that's a big one.
Excellent, Vasudha. Always a pleasure to talk to you. So many nuggets of knowledge that come. Thank you so much for having made this time to be with us, and we look forward to having you on again.
It's a pleasure. Look forward to it.
Great.